Hello everyone, I hope everyone is doing great and well. Welcome to another live stream, the Divers live stream number 3, where we're going to look into an introduction into the cryptocurrency markets and as well as how to analyze such markets. This is part of the setting up for success module, which is setting you up for success, the introduction to all before going into details basically. So let's get started with this live stream. I want to start with disclaimer. Pause this screen, just read it. Look, this is not financial advice. Everything said here is for educational purposes. And just pause it and read it. So the outline for today's live stream, what we're going to talk about is we're going to answer a very important question, which is how does the cryptocurrency market move? So we're going to answer this question. We're going to have a small introduction to the technical analysis, and also we're going to have an introduction to the fundamental analysis, and then wrap everything up, basically giving you a new perspective on cryptocurrency market. So I want you to observe here. Observe Bitcoin. This is Bitcoin chart, right? So if you go on Bitcoin, imagine yourself coming into this cryptocurrency market. You open the Bitcoin chart and look at Bitcoin and say, okay, what can I understand from such a figure? Bitcoin, you'd be most probably like, okay, Bitcoin has been moving up. Now it's too high. I think it's high in price. But yeah, it's much higher than it was last year. It had some drops, but it's still too high. So I think I missed out on the move. Should I buy now or later? So this is the way any typical person looking at this graph would think. So what I want to show you, I want to explain to you, I want to introduce two simple but powerful concepts. If you understand and look, you're going to extract such much more information from this figure. So, basically there's a saying that goes like something. If you look at the figure, it has a thousand meaning, is something within that lines, but I'm going to give you two concepts. You're going to interpret it in a different way than what you're seeing right now as the Bitcoin chart. So the first concept is we need to understand the market elements. So what do I mean by market elements? How does the market move? The market is based on everything that happens on the market, why the market moves up and down is basically based on demand and supply. There are certain levels that has high demand and certain levels has high supply, or low demand and low supply, which causes that move in price. So who causes this demand and supply is basically buyers and sellers. There are certain market participants, which can be either a buyer or seller, that shows demand on certain level and buys, or there are certain level that has high supply and people are not interested in buying, so they sell. So the market participants, these people can be categorized into three parts, which can be either retail or any individual who just is, we call them, like in the crypto field, it's called dumb money, and then there is smart money. These are the retails basically. Then we have institutions and exchanges, which are people with big money, and these people basically move the markets. And then we have some bots, which are algorithmic bots, which are computers basically that trade and buy and sell based on some certain techniques they have. So these are the market elements, and this is what changes the demand and supply at each level, introduces the buyers and sellers and the type of buyers and sellers. So that was the first concept. And the second concept, just understand that concept. And the second concept here is auction market theory. So I'm going to go briefly into auction market theory, but we're going to go into much details in the future. So initially, what's auction market theory? What it is basically, it's a distinction between price and value. There's this concept that, okay, there's something called price, there's something called value. This coin has a certain price and a certain value, which is the value, what's the actual value, which is the price, and what's the perceived value by the market participants of that value, or of that certain coin. So this theory states that the market always seeks to find an area where there is an agreement between the buyers, which are the demand, and the sellers, which are the supply, a balance. So what the market always tries to do, cryptocurrency market or any market, is the price basically stabilizes or consolidates or moves sideways basically at levels where there's an agreement between a demand and supply, agreement between buyers and sellers, and we call this a balanced region or a balanced level, or it's balanced, price is balanced. And a disagreement in such a level between demand and supply is called an imbalance. So main takeaway of this slide is there's something called the auction market theory that distinguishes between price and value. And when there is agreement between buyers and seller, demand and supply, we call it a balance. And the disagreement is called an imbalance. That's all. This is the key takeaway of this slide. Moving on. So let's look at a graphical representation of this. So this is just a schematic, just shows you that there's balance. So price is moving sideways. Let me show you. There's a cursor. So this is price is moving sideways. We have a balance over here, right? We call this a balance region. But when prices break out, basically a disagreement between the buyers and seller, a disagreement or misalignment in demand and supply, we have this imbalance to another balance region, where buyers and sellers are agreeing on this level. So agreement, disagreement, agreement, balance, imbalance, balance. This always happens in the market. What happens is price moves from balance to imbalance to a balance to an imbalance, and so on and so on and so on. This always happens in the market. So moving on, now that you understand auction market theory, you can see that this is Bitcoin again. If you look at this figure again, you can see it differently. You can see now, okay, this region, this pump over here, which is an imbalance, buyers and sellers were not agreeing with each other. So they were searching for a certain price where they agree on, which was somewhere here, which is the balance region. Okay, we agree on this region over here. It's a balance region. We agree that the value of this asset, which is Bitcoin, should be valued. The value of this asset, which is Bitcoin, should be at this certain price. And we agree here, let's stay here. Then an imbalance occurs after time passes by. Okay, the value of this asset should be higher. So this causes a certain imbalance to another region of balance. And then an imbalance to a balance, imbalance to a balance, imbalance to a balance, and then imbalance to a balance. So price keeps moving between balance and imbalance and balance and imbalance. This is the main key takeaway of this slide. And moving on. So for example, if you have a region of balance, which is this price over here, I want you to understand the psychology here. So we discussed balanced and imbalanced. So there's this region over here, which is balance, which is around, let's say 36,000. Okay. Then the buyers and sellers got into a disagreement and it became imbalanced and it started moving up, meaning that the buyers were much higher than the sellers, which caused this move in the price, right? The imbalance. They tested this place, they had a balance, they had a certain agreement as time passed by. Then buyers and sellers they started discussing and saying, okay, I don't think here's the price and value are aligned at this level over here. So let's retest the previous region, which is this previous balance region. So it goes back to that region. Then they come again and say, okay, let's go higher now. And they get balanced and then they get imbalanced, testing this region again to make sure that they made the right decision. And then they move down again and test this region again, which is where we are today at this price level, testing the region of balance of somewhere here. So as you can see, from previous balance region, we can predict or we can know where future balance regions could be and price could move to if we're at a certain imbalance region. So imagine if we didn't have all this price action, we were here, if price started moving up, okay, we could say that this is a region, this would be a region where price would be balanced and where the buyers and seller would try to make a decision either to go higher or lower, where they decided at this place that, okay, we need to go lower and test this region before going higher. Maybe we're doing the wrong decision here. So you understand where this now auction market theory shows you that buyers and sellers are keep on trying to make decisions and see what's the difference and how to align price with the value of the underlying asset, which is Bitcoin in this case. So I hope this gives you a new perspective of how to look at the market instead of looking at it at going up, going down, going up, going down. It's too expensive or it's too low. You actually now can understand through this lens basically, and in this piece of knowledge and concept, you can understand, okay, price moves from balance to imbalance, price moves to an imbalance to balance, and this is based on demand and supply, which could be retail, institutions, or bots or computers basically. And if this certain area was balanced before, maybe these buyers and sellers would be interested in testing it again, such a level, in terms of being a good level based on the value or not in terms of price. So clear concept here, auction market theory. So yeah, let's now move on to the introduction to technical analysis. What is technical analysis? The general definition, if you type this in Google, it shows you that it's a financial analysis that uses patterns in market data to identify trends and make predictions. So financial analysis, it uses certain patterns based on the market data that we saw to identify certain trends and patterns. But we at MetaWiz disagree with this. We made slight tweaks to this definition and said that technical analysis for us is basically using effective tools, effective meaning tools that actually work and not lagging tools, and concepts, which is similar to just what I explained to you. Basically, the auction market theory is one of the concepts that you can use for technical analysis. On past market data, looking at balanced and imbalanced regions to identify demand and supply zones in the future where there's a high probability. This is very important. We don't want to identify regions where there's a low probability for the market to react, but a high probability, because this is a game of probabilities. Technical analysis, probabilities. So we identify high probability regions for the market to react. So basically using tools and concepts to know future regions where the market would react, so we can place buy and sell orders and make some money out of the reaction. So that's the difference between the general definition and the definition we have here at MetaWhales. Moving on. Now, with that concept that you saw, the auction market theory, balance, imbalance, the supply and demand, and also the technical analysis, these are regions where you can identify using the tools and the concepts to know, okay, for example, let's start with here. At this point, this is green point, meaning that demand was much more than the supply, price went up. And then here we had supply much more than the demand, meaning that, okay, there's too much supply here, not enough demand, let's push price down, which is an imbalance region, balance, imbalance, then back to balance, imbalance, balance. Then there's this was basically a full balance, also you can call it in the macro time frame. Then there is this imbalance region which pushed price so high. Basically, the supply was much less than demand. The value and the price were misaligned. So the buyers were like, okay, let's see. Bitcoin is being used. For example, this is the narrative. Bitcoin is being used a lot. Everyone's getting interested in Bitcoin, but the price is at 3,000. This doesn't make sense. Let's try higher prices and let's see how people react to higher prices. And this is what happened. An imbalance, balance, a bit of balance. Are we doing the right decision? Then we're like, okay, maybe we are. Imbalance, balance. Are we too high? Then they are, maybe we're too high. Let's go back and test the previous region. Imbalance to balance. Okay, this region seems fine and it's not too high and it's a fair price. So let's go higher back. Test this region again. No, this is too high again. Let's go back down and test lower region. So this is what happens based on supply and demand and where sellers are interested and buyers are interested and so on. So moving on. So based on the supply and demand and all this technical analysis you do and use the tools in order to find such regions of supply and demand and where the buyers would be interested and the sellers would be interested, you have to have certain components in order to take advantage of such opportunities and actually make some money. So the components are, if you're trading or investing, it's similar. The components are the entry, the trigger, the invalidation, and target. People usually talk only about entry, invalidation, and target. But I added here a trigger. I'm going to explain to you why did I add a trigger, which would give you a higher which would filter out the low probability trades and actually keep the higher probability trades. So the entry is basically where you're planning to enter the underlying asset. So if you're looking at Bitcoin, what is that level where the buyers would be interested and they would try to push price higher in order to test the value of the, basically, and cause an imbalance to go much higher. So that's the entry. That you'd have a level on your chart saying, okay, here I predict people will be very interested. So let's go. So I'm gonna try to enter there. That's your entry. What's your invalidation? See, I skipped trigger because I want to keep it till last. What's your invalidation? So the invalidation is basically what will invalidate the setup. Okay, so you made certain analysis. You said, okay, at this region, price should go higher. Buyers should be interested. But what event if it happens, this setup would be invalidated and this would no longer be a valid entry. So that should be clear. That's very important component that you need to consider before actually putting a trade or investment plan. And also finally, you have the target, which is basically at where would you take profits? Okay, you got to that region, which is entry. You know your invalidation, but what's the target? Where would you take profits? Where would you close the position and actually take the money out? So you need to be clear about your targets, which are basically regions. The targets basically, if you're looking for a region to buy, the targets would be a region where people want to sell, you know? So these three are very key and everyone talks about. But what I have added extra here is the trigger. This trigger, if included, and if you look at this trigger, it actually doubles the percentage, the probability of you actually winning and making money on this trade. So the trigger is basically what events will trigger the entry. So you have a certain entry, right? This level, you say level at 2000. Let me go to the previous slide and see. So for example, you have a level over here and you say at this level, I'm going to enter. But if price goes below this level, this is no longer valid because price went below and buyers were not interested and sellers were more interested. So this is invalidated. This trade setup is invalidated. My target would be here because I feel that at 64,000, the selling pressure would come in and people would see this as overvalued. Okay. So the trigger is very important. So you had this level over here. When price reaches that level, you don't enter immediately. You need to wait for a trigger. So what's the trigger to make you enter at this level? So the trigger can be, I wait for a couple of candles or a couple of minutes. I want to keep it simple. That I see buying interest. I see the volume increasing. I see people actually interested in buying. And then I enter instead of just entering blindly because this was my entry. You understand what I mean? So it's very important to look at the trigger as well. So moving on, we're going to go much more details about this because this is a very important topic and I need to make a couple of videos to explain it. So we're going to go into much more details about it in the future live streams. So moving on, some technical analysis tools we have is basically, I'm just mentioning the ones that I use, is market structure, which is a concept more than a tool. And then we have the support and resistance levels, which is also another concept. Then we have the Fibonacci tools, the volume tools, the TPOs, time price opportunity, the harmonics, the pitchforks, and so on. So basically, we're going to talk about this in much more details. Each one would have a couple of videos by itself just to explain it in the full details so you understand how to effectively use such tools. As you can see, I haven't used moving averages. I haven't used the MACD, the RSI, and all that because I don't actually use them to make money. They are tools for me. Indicators are tools that are lagging, and I don't like using lagging tools because basically if you're lagging, you don't have an edge. You're behind. You need to look ahead. So I don't like using those tools. Moving on. Here I'm showing an example. So what I wrote in this example is basically I used the Fibonacci tool, some support and resistance levels here, and also this region of balance, as we saw, the concept of having a balanced region. This was a balance. We had this drop, which was an imbalance, then a balanced region. Okay, now we're here now. So price said, where should we go next? Basically having this range. So what I wrote here is Bitcoin confusing. Bitcoin is basically confusing a lot of people. People are like, okay, what's happening here? Is Bitcoin going to go up or down? People are trading this and losing money, and this is what Bitcoin actually does. So all you need to do now is mark this level, which is the weekly level. I'm just going to name it out, but we're going to go much details later. The weekly, the Fibonacci level, the high of the range, and this Fib fan level, which are the Fibonacci tools. All you need to do is mark this level 51,957 level to stop out all the shorts, people who are shorting, and then see people long there, basically the retail. You remember the market participants, the dumb money, basically long into resistance, and then that's where you short, basically doing the opposite of what everyone has done. And this is exactly what we got. Once we reached that level, touched that level, the single level 51957, we had this 12% drop, and actually right now it's much more than 12%, it's around 18%. So this is what I mean by doing proper TA, finding a region where there's going to be a balance and imbalances, and finding a region where there's going to be sellers are interested in looking for lower, the distinction between value and price, and then entering based on the trade components, which are their entry, your trigger, your invalidation, and your target. So this is an example of TA. Now let's move on to fundamental analysis, which is very important as well. And it's actually very different from the traditional fundamental analysis. So fundamental analysis is basically generally performed on projects that do not have past price data for long-term investing. What I mean by that is that fundamental analysis is basically performed on coins that do not have graphs. Let's say the coins just came out and they haven't been traded on the market. There's not enough data for it to be traded. So we can do some fundamentals, for example, look at the team and all that to identify whether this is a good project or not. And as you notice here, I wrote long-term investing. So basically you cannot use the fundamental analysis for short-term. Traditionally and generally you cannot. For example, I cannot buy now and sell in 5 minutes saying, okay, this fundamentally looks good and I'm going to make money in 5 minutes. That's not possible with fundamental analysis. So you need to look at the very long-term invest. This is a type of long-term investing. So in crypto, this is different, however, because the price, when you're looking at stocks, for example, like Dropbox or Nvidia or Tesla, for example, you're looking at the technology, you're looking at the business, you're looking at the earnings, you're looking at all these financial parameters. But here in crypto, the fundamental analysis is much, much, much more different. Because in crypto, the price of the coin is not relevant to the technology, neither the business. Because most of these projects in crypto, around 99% of these projects are just ideas, just a white paper, and are driven purely by people's emotions, basically hype and FUD. I'm going to go into details with that. So as you can see, fundamental analysis, okay, we have certain definition for it, but it's treated or used very differently in the crypto field. So that's what also we're going to talk about here. And also another point is that with fundamental analysis, let's say the S&P 500 or the Dow Jones, as you can see, those basically markets have been going up since forever. They keep on going up regardless. Nvidia has been going up since forever. So there the hodl or a diamond hand mindset might work and works on there basically. But here they might work on large caps, but rarely work for low cap projects, meaning that in crypto projects, such things don't work because of the volatility, because we're basically investing in ideas and people emotions, and emotions change much more than businesses and technology. I'm sure you know that. And this is where I introduced a term called crypto investing exposure time. So let's call it investing exposure time. The investing exposure time can be really high for stocks, for example, because you can be invested for a really long time and make money. And that's actually how people make money in the stocks. Compound interest, and Warren Buffett style investing, and all these things. But what I call the crypto investing exposure time is much, much, much less. and it differs for depending on the micro caps and the large caps and the medium caps and the low caps and so on. So the hodl diamond hand mindset, I don't recommend it much for investing because there are certain strategies to invest in crypto projects, which I'm going to discuss, but this doesn't work here. So basically, fundamental analysis for crypto projects, how it's different. It's a mixture of narrative, what people think about the project, and also speculations about, okay, what people would think about this project in the future, or what's the future of this project. Moving on. Most crypto projects are just ideas. So, crypto projects, any crypto project, as we discussed, is just an idea. So, ideas are subjective. An idea can be good, idea can be bad. It depends on the person. I can say this idea is very good, and you can say this idea is very bad. So, it's very subjective. So, it's depending on the judgment of humans, of people, basically, how they see this project, what's their emotions towards this project. So this means you're not actually investing. When you're investing in crypto, fundamentally, you're not investing in technology. You're not investing in business. You're not investing in the product. You're not investing in the services it provides, the problem it solves. No. You're investing into humans' opinions. So this is very important realization and thinking, way of thinking you should have when you're investing in crypto projects. Of course, this won't be forever because products would come, and products would come, and most crypto projects would have actually products and generate revenue. But for now, most of them, around more than 95%, are just ideas. So most crypto projects either don't work, they don't work. Like most of them don't work, or have no real life application, and are not generating any revenue. So a high percentage are like that in the crypto projects, and you need to accept this fact right now in order to start making money. There are certain ways we need to, facts and ways we need to take to actually make money in this market. So this means you're basically investing into ideas, a white paper, and not technology, the products. Moving on. I'm going to come with an example later on. But the example I want to talk about is basically, let me talk about that example right now. So the example I want to talk about is Cardano. So Cardano keeps on saying we're building a smart contract platform, but is there anything actually behind it? No. But where does it stand in terms of the top market cap? In terms of market cap, it's at very high, it's in the top 10 basically. So that's an example. You can see Cardano. So most projects are like that. For example, in the gaming sector, in the metaverse category, if you look in the metaverse category, if you go below the first, actually, most of them don't make money. Approximately 99.9% of them actually don't generate any revenue. And if you go lower than the top 10, none of them actually have working products. So they're just ideas, and they're booming basically. And people are becoming millionaires and billionaires from these coins. That's what I mean by investing in ideas and the narrative, and not the product itself. So this brings another point, which is hype and FUD, which builds on the example of Cardano, ADA as well, because you're gonna see now. So if this investing, crypto investing, is all about people and the narrative and what people think about it, then we shouldn't learn about the technology. We should learn how to read people and their mindsets in crypto. Basically, look at their sentiment towards certain projects. Why would they be interested, and when would they lose interest in this project? So this boils down also, if you go down further and deeper into this topic about people, it comes into emotions, and there's two main emotions here. It's either hype or FUD, fear, doubt, and uncertainty, or hype meaning greed. It's the same. Greed and fear are the same. So either the person is greedy or he's fearful. Okay, these are the two main emotions that drives the crypto investing part and the fundamental analysis. So if these are the two main emotions, then these are the two main control. Imagine this like a game, for example. These are two main control parameters that institutions, exchanges, or people with certain interests can use to play and control the price of certain coins for their own benefit. Which, again, coming back to the example, we have this coin called Cardano, ADA, and there's no project behind it. It's just simply an idea, a smart contract platform, and it has pumped to the top 10 market caps. So the question comes, why? How? They're not generating revenue, but how do they do that? It's basically institutions and exchanges building hype around that project, shilling that project, and pumping its price so high. So this is what I mean by hype, fear, and greed, and FUD. So basically, this is the hype FUD scale down here, as you can see. If something gets overheated, so basically that's a sell signal. It's more towards, for example, you can draw a project. It starts from the middle. If it gets undervalued and people are doubting it and saying, okay, this project might fail, that's a good buy opportunity. But if it gets anywhere here, but if it gets anywhere in this region, it's overheated, and it gets super hyped up, that's where you need to sell. So it's based on two emotions. You read people, you look at market sentiment, and understand, okay, when to buy and sell. Moving on. So also a part of fundamental analysis is you should choose your category. You cannot be a master of all trades, a jack of all trades, as they say. You need to choose a category you like and master it. This is an example of all the categories that you can find on CoinGecko. For example, you can find smart contract platforms. You have Ethereum, Solana, and our favorite token that we just talked about. Then we have the Polygon ecosystem. We have the Binance Smart. We have different ecosystems. We have stable coins. Yeah, don't invest in stable coins. I don't recommend that because, you won't make much money. Anyways, so then you have DeFi, you have centralized exchanges, you have Cosmos, you have Polkadot ecosystem, you have meme coins, you have metaverse coins, you have gaming coins, you have NFT tokens, non-fungible tokens. So choose something you love. Basically, whatever you love. If you're into pharmaceuticals, you choose these companies and watch those companies. If you're into robotics, into AI, into machine learning, choose those categories. So whatever you're interested in, cupcakes, whatever category you're interested in, just choose those categories and master it. Don't try to invest in everything, because all these people who made a lot of money investing in crypto actually choose one category and kept on watching it. Like they watch it every single day. They keep on watching it basically. They do nothing else but watch it. Those who became millionaires from investing in Solana kept on watching Solana. And from the DOT, basically, in the DOT, they kept on watching the Polkadot ecosystem and watching all the tokens, all the projects coming in the Polkadot ecosystem. What were their behaviors? What were patterns? How did investors react? So once you watch certain categories so much, you start understanding, okay, how investors would behave if they see such a project. What would they do? When would they be interested? When would they lose interest? And this is how you can find the next big thing. So what I'm trying to say here in this slide is choose a category you like, whatever it is. Watch all the projects that come out in that category, and then identify patterns and investor behaviors in that category. As you watch, it's going to come to you. You're going to see it. And then you can find the next big thing very easily and make a lot of money finding that next big thing. Moving on. So some fundamental metrics you can look at are basically the market cap, the diluted market cap, circulating supply, the trading volume, the maximum supply, the tokenomics, what's the token mechanics, and the team and experience, who's the team behind the project, the vesting schedule, when are they planning to release some tokens, and so on. So there are many fundamental metrics. So this is basically an introduction, but we're going to go into much details in the future live stream. So this is overall, you can understand how fundamental analysis is and how it's different from traditional fundamental analysis. Moving on to the summary. So we talked about market movements, the market participants, and who moved the market, the auction market theory, from balanced to imbalanced and imbalanced to balanced, And then we talked about the introduction to technical analysis and fundamental analysis. And also we talked about that, okay, you need to focus on one category. When you focus on one category, by the way, you get better in fundamental analysis, technical analysis, and basically predicting and having that feel of the market. So it's very important. That's why I kept it over here. For the Q&A, for any questions you have after you watch this live stream, I'll be in Discord. You can ask your questions about the live stream in Discord. I'm going to answer them as soon as I see them. And yeah, just ask anything, ask away, and I'm going to answer all the questions. Next live stream would be on Monday, where we're going to look into Bitcoin and what Bitcoin has done practically. What's the plan for the next week, and how we're going to trade Bitcoin, as well as what all the trades we took this week, and just study them, analyze them, and have some key takeaways. That being said, thank you very much for watching, and I hope you enjoyed this video. Yeah, I'll be in Discord if you want anything. And thank you very much, and I hope to see you next time.